It's a pleasure to welcome back Bob Chapman.
Well, thank you very much. I'm very happy to be here again, and I am very glad spring is coming, and I'm looking forward to summer as well.
I share your sentiments there, my compadre. I am not a cold weather person. We are just starting to see signs of spring weather. I'm looking right out the studio window here. Two lovely whippoorwills are stealing moths from my deck to feed their young, setting up a nest. You know, Bob, according to the blogosphere sources, last week's minor sell-off in the precious metals was used as a short covering opportunity by the big commercial investors, and the markets rebounded with a vengeance last week. Both gold, silver ended the week near the break-even point. But before we get into the details and forecasts and all that good stuff on the metals, you know, I'd like to discuss the general sentiment. I talk to professionals, as do you, all week long in these markets, and for the most part, they remain a bit sanguine on the precious metals prospects. Then when I talk to folks outside the field, friends, family, members, etc., the typical response I hear is, I'm not buying anything, Chris. The economy is weak. There's not enough jobs. I'm nervous. I don't like all this volatility. I don't trust the markets. These are some of the comments that I'm hearing. And when your money is sitting in cash, you think you're not making a trading decision, but you have. You've decided to opt out, to accept meager to no returns, minimal interest. They're denominated in dollars. Instead, I want people to kind of wrap their minds around the idea that an investment in gold and silver may not provide that interest income. Although I will say a lot of these top picks that we're following in the newsletter do provide dividend yields. But what you've done is you've crystallized your wealth. Gold and silver are the life jacket for your funds to help you wait out these rough financial seas. What are people telling you? Not professionals, but, you know, the barber, your dentist, the waiter at your favorite watering hole, bartender. What are folks telling you on the golf course or in the grocery store? What are you hearing from everyday people? You know, are they invested in these markets, or are they in cash? Are they as nervous as the folks I talk to?
Well, I would say that most of them are long-term and gold and silver-related assets. And so that puts them in a special category, I guess. The only reflection I've had is maybe over the last couple of weeks I might have got 5 or 10 letters. 5 or 10 aren't very many.
So do you think perhaps, Bob, that your subscribers are just frankly due to your tutelage, as well as the fact that people tend to congregate around like-minded people and sources? They're head and shoulders above, you know, the typical folks out there, which kind of skews our little investigation here. So, you know, returning to last week's volatility, James Turk from Gold Money, friend of the show, agrees that the minor shakeout inflicted zero technical damage on the market. And in fact, you know, Bob, from my perspective, I think it's a sign of accumulation as the strong hands greedily buy up metals from these weak hands who get nervous every time the price falls a few percent. This type of behavior is precisely what makes trend-following investors wealthy. As long as the trend is up, the group of sharp investors hold firm to their metals. And I'm still holding on to a tiny silver position I purchased way back in 2003. Why am I holding on almost 10 years later? We can make the argument the fundamentals are solid, but you know, the fundamentals were kind of solid all the way from 1980 to 2000. Much more compelling, though, even right now than it was back in 2003, simply because the global government and the central banking profligacy has gone into overdrive. Turbo is kicked in, nitrous oxide has entered the fuel injectors. But still, the overriding reason why I hold my 10-year position is due to the fact that the trend is higher. You know, we can analyze the markets all day long till we're blue in the face, but then so are tens of millions of other bright people on the planet analyzing just as much, many of whom have considerably larger resources at their disposal. So when people say, why do you want to own silver? Didn't it fall from $50? I'd offer the retort, yes, it provided an excellent bargain price. Now it will triple the funds invested as it runs to 100. What do you think?
I agree with you. As far as sediment, it all depends on who you're talking to, and so you got to bring those sources in and find out where they're coming from, and then you got to do each group separately. I mean, it's a very hard call. You go long and you stay long. And it's no more difficult than that.
We've also had, I think, something that's discouraged some investors occur recently, and that's the precious metals equities year-long trading range. From my perspective, not only technically, but fundamentally, this appears to be setting the stage, winding up for a major advance, I think, in the coming months. The fundamental case for owning solid gold and silver companies is rock solid. The big caps remain one of my favorite sectors throughout the markets. Incredible earnings, increasing dividends, and, well, charts that look like coiled springs. I call this the perfect mixture for a price explosion to record highs. In fact, I'm so confident in this forecast, if my Alpha Stocks portfolio does not beat the XAU Gold Index by at least 10% over the next 52 weeks, I'll refund your entire subscription. Keep in mind that it's higher by a factor of several fold already. Bob, do you think the precious metals equities have substantial opportunity going forward?
If you base it on the real price of the real cost of inflation since 1980, look at $9,000 gold figures. You got a $2,500 gold. So gold and its fellow silver will move up. I mean, it can't help but move up. And the machinations of governments in markets for their particular needs are very disjointing and very misleading, and people shouldn't be taken in by it. We still got a problem in Europe that is a catalyst for perhaps a collapse in the world financial markets. We haven't even talked hardly for weeks about the United States and Great Britain and their problems financially and the money that they're spending, which is colossal on a debt basis. And so there's every reason to own gold and silver coins, bullion, and shares, and especially the shares. These shares would be 150 times higher if it wasn't for what was going on. These trading companies are aggressively using algo, which is the algorithms, which is essentially front-running. SEC says nothing. They call it something else so that they won't have to stop them from doing so. And yesterday I noticed that Mr. James Welch, former trader of MF Global, has been called upon to explain what he was doing, banging the close on deals that they were involved in, probably on the short side. That's the only thing that would figure in that kind of a matter. Now, what's important here is that in banging the close, the next question is, were they naked short, if I can remember correctly? That could be the start of something good. I've been advising some companies. Those companies have got a copy of virtually every trade for the last 3 years in their stocks. And they've been banging the close every day. In fact, even when they go to take office, they fill them on the bid. It's just incredible, the stuff that's going on. I don't often discuss this on the program. But sooner or later, this is going to become a number, so to speak. So stand by, because I think you're going to see a lot more pressure in the SEC about banging the close and about naked shorting.
Absolutely. Naked shorting has been a huge problem. I think it first captured some of the spotlight. Back with the Sirius fiasco, there was huge trouble with naked shorting. Many, many people were brutally injured financially from those naked shorts. And as far as I know, to this day, there's been practically no investigation. So in the final analysis, it is a big problem. But I do think it's important, Bob, that we talk about algo, what you're referring to. Algorithmic trading is a great passion of mine. You could say I'm at least as passionate about it as I am gold and silver. I think we have to be careful to differentiate between algorithmic trading and high-frequency trading. But if you're an algorithmic trader and a high-frequency trader, that's where I believe the problem is. So I want to make sure we make that differentiation. I prefer to just call myself a quantitative trader. Bob, I wanted to talk about some new shows and films I found this week that I think the listeners will like as we move on here. Doomsday Preppers. My Alpha Stocks newsletter subscribers have been watching these shows now for weeks, and I found the latest episodes, fully uncut no commercials, around 40 odd minutes long from the latest season. They're very difficult to find, much more difficult than you think. Just try to find them. Just log into your Alpha account, and voila, you'll be able to see Americans are doing everything they can to prepare for Armageddon. Bob, did you know that at least 3 million Americans consider themselves preppers, and they estimate that that number is actually on the low side?
I would have thought that the figure was higher.
At least 1%, and I would estimate probably closer to 2 to 3%, so about 10 million people. A lot of folks would probably not feel comfortable revealing that they are preppers. Maybe that's part of the problem with getting accurate statistical, empirical data on the topic. But